Welcome to Trading Day. I'm Roger Peterson. Thank you very much for joining us. We have a lot coming up on the show, but let's get to some stories we're following in the BNN Bloomberg newsroom. Canada's GDP edged up 0.1% in January, driven by strength in goods-producing industries, according to Stats Canada. Gains in mining, quarrying, oil and gas extraction, construction and utilities more than offset a contraction in manufacturing. Meanwhile, services-producing industries were unchanged. Retail trade and finance, along with insurance, saw increases, while wholesale trade, transportation and warehousing saw declines. Preliminary data points to a 0.2% increase in February. Shares of Constellation Energy are falling today, down more than 7%. The utilities company gave a full-year profit guidance that missed estimates. The American company plans to invest close to $4 billion to purchase fixed assets for expansion. Constellation is also increasing its stock buyback authorization to $5 billion. The energy producer also missed its guidance for its 5-year outlook through 2030. The euro area saw its steepest jump in inflation since 2022 as the Iran war continues to push costs higher. Consumer prices rose 2.5% in March from a year earlier. Governments and central banks in the region are slashing their projections for economic growth, and companies are bracing for a hit to demand among consumers. The European Central Bank is expected to make a decision on interest rates next month. And taking a look at the TSX and south of the border, things are booming right now. On news out of the Middle East, the potential for a peace plan there or some kind of a peace there. And taking a look, the TSX up more than 2.25%, led by materials and healthcare and tech. All of them are up 3 to 4.5%. Only virtually everybody is in the green. South of the border, similar numbers to look at here. And look at the NASDAQ right now. Everybody on a runaway with this news coming out of Iran, that maybe even Iran is saying yes to a deal, a potential peace plan. S&P 500 up 2.5%, Dow Jones 2.1%, and the NASDAQ 3.4%. Okay, oil was on track for its strongest ever monthly rally. I'm sure it depends on what is unfolding right now after the U.S. president made comments on social media calling on potential allies and advising countries to buy U.S. oil or go to the Strait of Hormuz to take it. Here to discuss this continued geopolitical tension and other market drivers today is Lori Pinkowski, Senior Portfolio Manager at Canaccord Genuity Wealth Management and founder of Pinkowski Wealth Management. It is another day, I guess. Thank you very much for joining us, Lori. But boy, oh boy, another crazy day. Markets booming. I haven't had a chance to even look at oil right now to see what it's doing right now. Where are we sitting with it?
Yeah, oil is obviously moving lower with the news at this point. And so, things are changing hourly, day by day. I always say it's new and exciting daily being a portfolio manager during these times. But again, it's what you want to do in the portfolios, what you have done, and just being on top of it, right? I believe in active management, and it's really important to make necessary changes as you see things change. And what we've been looking for are some of these kind of green shoots that we're seeing just now, obviously, with the idea of some sort of peace plan. However, we also want to see ships start moving. We want to see all sorts of things happening. So that's what we're looking for right now. And like I said, it changes hour by hour. And again, myself, my analysts were on top of that, making changes in the portfolios now and obviously in the futures.
And what do you do? I mean, that's now. What do you do tomorrow? What do you do an hour from now? What do you do tomorrow? What do you do in a week with everything the way it's playing out?
Yeah, well, we always have a plan A and plan B, that's for sure. So when the conflict started, again, being active managers, we started to raise some cash in some of those sectors that might be most sensitive to the situation. And then we were looking at trimming some profits on some of the other sectors. So it's kind of been, we were looking at travel stocks first, some technology, some financials, just given private equity situation out there as well. And so we have about 20% cash right now. So we always have a plan of putting that money back to work. It's great to hold some cash, cushion the impact for clients and their portfolios. However, we need to also put that money back to work. And so that's where I was saying, looking for some of those green shoots, which we're obviously seeing some today. What's important, though, is follow through as well. We even have a buy list ready to go, and some of those sectors are going to be the sectors that were hardest hit. But we do definitely want to see the price of oil come down and stay down. It's not just, a one-day thing here. We need to make sure that lower oil prices will persist. And again, day to day, whether it's, what Iran is saying, what the Trump administration is saying, we need to see them be a little bit more cohesive in the messaging to markets. But today, I will say, seeing markets move this way, that is positive for sure, because we haven't seen a bounce like this for some time.
And do you want to give it a little more time to make sure this is pretty much a guarantee, or are you jumping in now too?
Yeah, no, not today. I'd want to see some follow through for tomorrow for sure. Just see what comes about. It's all about risk management in what we do. We manage a lot of retirement money, and we want to make sure that we're making insightful decisions based on facts. And of course, as you know, there's been a lot of rhetoric going back and forth on both sides. So we want to see something in place, at least the beginning of the end of the conflict, I think is important. And even better yet, seeing some ships flowing through the strait. That would also give us that confidence to put some money to work. And when we do start buying, the way that we will do that, it will be in tranches, right? So if we're buying a position, maybe buying half the position now, half the position later. So again, you just want to be cautious in this environment. It's good to get excited. It's good to see a green day like today. And on the flip side, it's important not to panic in situations of geopolitical conflict or tensions, because often in history, those have been buying opportunities. But is the opportunity, as you're saying, Roger, is it today? Is it a week from now or a month from now? And what we really need to see is the price of oil move substantially lower, because we've seen a huge move to the upside. You're looking at Brent. Brent has moved, I think it's 50-60% moved 50 to 60% higher over the past month. And so we need that to move lower in order for this not to affect economic growth globally. So that's what we're really looking at right now.
And where do you see it? Now we're going to get into some assumptions, but say we do have a deal that looks like there is going to be a peace plan or some kind of a peace attempt. How long do you see it taking oil to return, and what does it return to?
Yeah, my team and I were talking about that, and I think if we could see oil somewhere between, or hovering around 80 to 90 a barrel, that would still be much better than where it is today, obviously. And if a deal is reached, and again, this is, get my crystal ball out and where the price of oil will fall to, I think it's important to, again, just be looking at things daily, being on top of the news, looking at the price of oil, and being ready to, like I said, add some positions back when we see that follow through. And whether that be in materials, whether that be in travel, consumer discretionary. And then on the flip side, we have energy, we have fertilizer stocks, defense. Obviously, if a deal is reached and we stop seeing missiles flying overhead in the Middle East, then you have to be cautious of those sectors as well and start reducing and taking some of the profit off of there. So it really is, Roger, day by day. Of course, we're long-term investors, and my belief is the markets get over everything and will move higher. The question is that now, or is that in a few weeks from now? I think that today, like I said, is a positive, and it's likely that we'll see some follow through. Remember, you have the whole year to make money, whether it's for yourself or whether it's for clients in the position that we're in. So usually we see a 10% correction annually. So it's not a surprise that we're in this situation right now. This time it's conflict. Last time it was tariffs and Liberation Day. So, the point is where do we go from here? Like I said, we've got some powder dry, ready to put it to work, but want to see some follow through.
All right, we'll leave it on that note there. But Lori, thank you very much for joining us.
Thanks so much.
Lori Pinkowski is Senior Portfolio Manager at Canaccord Genuity Wealth Management and founder of Pinkowski Wealth Management. Coming up, we'll dive into the winners and losers AI is creating in the Canadian labor market and how you can stay ahead. That's after this. Well, many still consider AI to be in its infancy, but the bubble has spread like wildfire, hurting young workers eager to jumpstart their careers. But my next guest argues that by embracing the AI revolution, they stand to benefit the most. Let's get more from Mike Moffat, founding director of the Missing Middle Initiative. Mike, thanks very much for joining us.
Oh, thank you for having me.
All right. AI, everybody is trying to make sense of it, figure out where it fits, who it's fitting into it. And you say, though, for people looking for work, it can actually, especially those coming out now, it can be a good thing.
Yeah, absolutely. So we are seeing young people having trouble getting a first job or a first career job because large companies in particular are replacing the types of tasks that those workers used to do with AI. So kind of low-level research, entry-level graphic design and that kind of thing. But since a lot of those corporations as well, aren't really AI experts, the folks that they are hiring tend to have much more ability to use AI. So it's really a double-edged sword for young workers that is creating fewer opportunities overall, but the folks that are getting those opportunities are the ones who are most adept at using the technology.
And are they embracing it? Are young people embracing AI?
Yeah, absolutely. We are seeing a lot of young people benefit from it. And when they are getting jobs, it puts them on a level playing field that they can get 10, 20, 30 years worth of experience, by asking AI questions. So I have an example here. Recently my refrigerator started making a horrible noise. I put in I recorded the noise. I told AI, hey, this is my fridge model. This is the noise that it's making. Diagnose the problem and tell me how to fix it. And it said, okay, well, it's actually your condenser motor right here. Here's how you swap it out. Here's where you buy a new one. I followed all of that advice, and I was able to make a repair that I shouldn't have been able to make. And that's what we're seeing with young people in AI, where, the type of knowledge that might have taken 5, 10, 15 years of training, they're now able to get help and get support from these technologies. So it's creating more of a level playing field at work.
So that passing on of knowledge from the older generation to the younger generation is kind of being cut out. Where does that leave middle age and older workers as AI comes in?
Well, there is some risk for them. Now, we're not seeing it at the moment. The study that Stanford University did showed that AI really isn't leading to a lot of people getting laid off or things like that. It's just leading to a reduction in new hires. But you have to think that maybe 2, 3, 4 years from now, companies are going to look and go, okay, well, why do I have this person with 25 years experience that maybe makes 2 to 3 times a new hire? Instead, why can't I get an ambitious new hire that knows how to use AI and kind of bootstrap their knowledge and be able to use them cheaper. So we're not seeing that happen yet, but I think that should be a real concern for it. I just turned 49. It should be a concern for workers my age.
But if workers like you, if you embrace AI like you're doing, you've just fixed their fridge, does that not kind of do you not have the institutional knowledge and then you have the AI on top of that, which you can impart your wisdom onto the younger people? So is it not worth keeping you?
Well, I certainly like to think so, but I think that's the lesson for older workers as well, that we need to stay up to date and we can't just rest back and go, well, I've been doing this job for 23 years, I'm irreplaceable. I think older workers need to identify these tools and not just how to use them, but AI doesn't always have the right answers. It's important to know the limitations of these tools so you don't go down the wrong path.
And I think that is one, I think, the big things, because I've started to use AI. You really do have to ask the right questions. And to a degree, you have to know what the answers might be, don't you? For now, at least.
Yeah, no, I absolutely. And one of the things I did with my refrigerator is I got a second opinion. There's multiple AI models. So, I asked one and gave me an answer. I asked another one and gave me the same answer. And that gave me a little bit more confidence. So, I treat it like hiring an outside consultant with experience, that you don't want to take what they're saying as gospel, but, they have some advice that could help you out.
All right. And are schools embracing this AI? I mean, are they accepting that this is really part of the future?
Well, I find schools go one of two directions, and I'm somebody who's taught for over 20 years. So some are really kind of pulling back and saying, we don't want our students to know this. If we detect that you are using AI in your assignments, you're going to get a 0. Where others are saying, okay, we do want you to do parts of this on your own, but we also want you to get comfortable with the technology. And I think that second approach is going to be the one that leads to better outcomes for students. So it's not a outright prohibition, but rather helping students know, okay, when should they use these tools and when should they rely on other methods, and helping them navigate that technology.
I mean, we used chalk and a slate 100 years ago, and we moved past that. I mean, it's inevitable, I think, that this is part of our future, and if the kids need to be coming out of school looking for that. How can they use it to try and get jobs in the first place?
Well, there's a few things. So first, I think, is just having those skills and being able to put it on your CV. And let's say you are a coder or someone like that, working with AI to, enhance your portfolio, that kind of thing. But it can also help you in your job search. If there's a great job that you want, you can get AI to review your CV, review your resume, and say, okay, let's move this around. Let's highlight this, highlight that. And again, it's not, you don't want to go into kind of full plagiarism mode where you're just doing a cut and paste, but rather that combination of human knowledge and intuition coupled with the tool is stronger than each of those kind of individually.
And bigger picture, I think one of the agricultural revolution, the industrial revolution, there was always a fear that jobs were gone and never coming back. But they've, for the most part, after it, there's been more jobs than what were there before. Is that likely with AI, do you think?
Yeah, I do think we are going to have more jobs than before. If you and I were speaking 200 years ago, we were all farmers or, had something, a similar job. Most of those jobs got automated away, but you and I are still finding things to do. So I'm not concerned that we're going to have mass unemployment, but I do think we need to be concerned that there is going to be winners and losers across the economy. We've seen that in the last 30 to 40 years with automation in the manufacturing sector and offshoring, which was able to happen with new technologies like container shipping. So, blue collar workers did get hit harder, and white collar workers like me kind of benefited from that. So I don't think we're going to get mass unemployment, but I do think we need to be concerned that these technologies do create winners and losers, and we need to kind of figure out how to navigate that.
And just one last question before, with AI, could we see manufacturing maybe returning because it can be done cheaper because we need fewer people?
Yeah, I think so. And you could have, that combination of AI, 3D printing, and so on. So, I don't have to buy this part from China. Maybe I could just have the AI say, hey, this is the condenser motor you need, and I can get my little 3D printer to print it out for me. So absolutely, I think these technologies that are less labor intensive can help bring some of those jobs back.
All right, we got to wrap it up there, Mike, but thanks very much for joining us. Appreciate it.
Oh, thank you for having me.
Mike Moffat is founding director of the Missing Middle Initiative. Well, Canada is taking a major step toward sovereign access to space. We'll have more on that after this. Canada is taking a major step toward sovereign access to space with a landmark deal that brings the Department of National Defence on as a long-term tenant at Spaceport, Nova Scotia, backed by a $200 million 10-year agreement. Here to provide more on this new deal is Steve Mateer, founder, president, and CEO of Maritime Launch. Steve, thanks very much for joining us.
Very much my pleasure. Thank you for allowing me to be here.
Congratulations on this deal with the Department of Defense. What does it mean? What are you going to be doing for them?
We are going to be enabling the rest of the site for them and our other clients that are intending to launch their rockets and satellites into orbit from Spaceport Nova Scotia.
And you've had some test launches. Where are you in the process right now?
Yeah, so we've done a couple of suborbital launches, have another one slated for this coming June, and another one in October. Those have been great training exercises for us to help build our team, that team being NAV Canada, Transport Canada, my team, the RCMP, et cetera. And those have been really fortuitous in helping to build out for the orbital launches to come. In the meanwhile, we've also restarted construction today with the season kicking in and expanding roads, and we've got design teams working on the building designs as we speak to get significant construction underway this year as well.
And so when do you hope to have, I guess, an official launch, and with either defense or with a commercial client?
The official being orbital launch, I would say it'll be the end of 2027 when we're fully commissioned and ready to go. And that will depend on which client we finalize and plan for that first orbital launch. There's quite a few clients that we're working with. Our model is to enable 4 launch pads with 2 of them taken now, one by D&D, one by Reaction Dynamics based in Montreal, and the other 2 we're working with some clients on down selecting among those for that first orbital launch.
And I believe you've had interest from South Korea, if I'm not mistaken?
Yeah, InnoSpace, the team in South Korea, is really interested in launching from our location. They love the neighborhood. As you can imagine, launching in their neighborhood is a little tough. They love the orbital inclinations, meaning the places, the directions that they can launch to without overflying Japan, for example. We're in a real sweet spot with our location hanging out over the top of the North Atlantic. So they and a lot of other clients are really keen to use what we have to offer.
All right. Now, Canada's looking to be involved in NATO's Starlift. What would that mean for you? How busy do you expect to be, or what would be perfect busy for you?
So the space economy, big time, is headed for $1 trillion a year in just the next couple of years. That's the overall commercial space economy. But with the addition of NATO Starlift, it speaks to an additional addressable market, because now there's 16 nations now participating in Starlift, meaning our launch site is offered into that program. So if there's a satellite that needs to be launched by some of these other nations for whatever their purposes are, we'll be able to offer that service to them. So for me, it's just a plus up to our addressable market.
And you said it's $1 trillion, just the launch market is $1 trillion, or are you talking about the whole into space, satellites and everything?
No, great question. The space economy is $1 trillion, and you think of Starlink and the services they're charging us for, et cetera. The launch portion of it is really only about $10 billion, but understanding that's the backbone, right? You need a spaceport and you need the launch vehicle to get those satellites made on the ground into orbit. There's only one way to do it, and that's what this site really offers with this geographic location over the top of the North Atlantic.
And who are you competing with? Is it Cape? I don't even think they call it Cape Canaveral anymore, do they? No, they've changed it back to Cape Canaveral. Who are you competing with?
There is just so much market. It's not really a competition. For me, the Space Force in the Space Florida world, they're launching almost twice a week. They've got other vehicles coming online with Relativity and SpaceX and everything else, and I think they're filled up. It's really about the fact that there's satellites sitting on the ground that are not getting into orbit. So we're not taking any anything away from anybody. We're just offering something that the industry really needs more than anything else.
And where, so you mentioned down in Florida, where else is there in the world? But I guess Kazakhstan, is that one?
Kazakhstan is one. ESA has a site in South America. There's a couple, Sweden and Norway are trying to go orbital as well, Saxford. But understanding each of those locations has their challenges associated with them, the limited orbits that they can reach, for example. Ours is in a real sweet spot that we can reach many of the key orbits that companies like Telesat are really looking for.
And are you making money yet with this?
We are generating revenue, absolutely, already. We actually started that last year with a contract with Reaction Dynamics. We've also got a program going for Leaf Space that does data downlink from satellites that they're selling to their clients, so we're hosting them. We have this agreement with D&D, which is revenue as well. And again, with the 2 pads and easily half a dozen different clients that are trying to vie for it, we expect to nail down those other 2 really in quite short order, because I've got design teams working on buildings and facilities and layouts and power requirements. If it's a European launcher, it'll have different power requirements, for example.
All right, and just, but not a random, but what do you think of Artemis going up and seeing a Canadian go up and go around the moon?
Jeremy Hansen is fantastic. He's been a real pleasure. I've had the honor and opportunity to meet with him and talk to him about it. He's certainly been a supporter for this initiative in Nova Scotia, and I wish him Godspeed in his trip around the moon. Looking forward to getting him back.
Oh yeah, he's coming back. Okay, we'll leave it there. Steve, thanks very much for joining us.
Very much my pleasure. Thank you.
Steve Mateer is founder, president, and CEO of Maritime Launch. Still to come, look at this. The Artemis II crew will test a spacecraft. Nice segue, huh? It's going to play a key role in America's return to the moon. We'll bring you more on the NASA mission after the break. Suncor is planning a bitumen expansion. The Calgary-based company has identified enough untapped bitumen production capacity at existing leases. The 400,000 barrels per day will replace production at its Base Plant mine, which is expected to be depleted within a decade. The added bitumen will come from 2 of Suncor's Alberta facilities. The energy company plans to adapt an extraction method which has twice the relative cash flow per barrel compared to mining. Shares of Virgin Galactic are climbing today. The American space company is restarting its tourism operations after a 2-year hiatus. Virgin Galactic had released a number of tickets aboard its spaceflight expedition, priced at, are you ready for it? $750,000 US. The aerospace company is also supporting the testing and production of its second spaceship, which is expected to enter service in early 2027, when the company plans to ramp up space flights. Shares of Aya Gold and Silver are soaring today. The Quebec-based company beat estimates on silver production in the fourth quarter. The miner says its silver mine in Morocco is now operating at steady state, enabling significant cash flow, further supported by a strong silver price environment. Looking ahead, Aya is focusing on advancing the development of another mine in Morocco, which is currently undergoing a feasibility study. And later today on commodities, we'll speak with Benoit Lassalle, president and CEO of Aya Gold and Silver, to discuss the company's fourth quarter results. And looking at the markets right now, you can see everybody reacting to the news that there may be an off-ramp to the war in Iran. The TSX up more than 2%, virtually every sector in the green, and south of the border, numbers are even bigger. 2.59, that's how much the S&P is up. Dow, 2.22, and look at the NASDAQ, up by 3.6%. Well, NASA is sending astronauts, including Canadian Jeremy Hansen, back to the moon for the first time in more than 50 years. The Artemis II crew will test a spacecraft that's to play a key role in America's return to the actual moon itself. Bloomberg takes a closer look.
I think our generation appreciates having a program that now we get a chance to take our own moonshots, what we call great things that humans accomplish.
NASA's Artemis program is the space agency's ambitious mission to send humans back to the moon for the first time in more than half a century.
It has a stark beauty all its own.
The last time NASA sent humans to the moon, they were locked in a space race with the Soviet Union.
Beautiful view.
This time, NASA wants to go back to the moon to stay in order to learn how to live sustainably off of the lunar surface.
I'm Christina Cook, and I'm a mission specialist on Artemis 2.
I'm Jeremy Hansen, also a mission specialist. Patrick Glover, Artemis 2 pilot. Reed Wiseman, crew member on Artemis 2.
The Artemis 2 crew is very much a crew of firsts. It will include the first person of color and the first woman to travel around the moon and into deep space, and it'll also have the first Canadian to do the same.
Just yesterday, our crew did a sim, all 4 of us, and this is something we'll do over and over again on the way to flight. But there are 1,000 ways this vehicle could kill you in space, and we don't get trained on every single one of those. We get trained on a methodology to approach the problem. The moon is a great proving ground for us to operate off of our planet. We've been doing it over 2 decades on the International Space Station. We built a global coalition for low Earth orbit, and now we need to extrapolate that to the moon as we set our sights out on Mars.
4-stage engine start.
Prior to Artemis 2, NASA launched the very first major mission in the Artemis program, called Artemis 1, which sent the Orion crew capsule around the moon to demonstrate that they could work without a crew on board. Now it's time to show that they can actually keep a crew alive while traveling to deep space.
Our goal is get to the moon and get back. 4 days out, 4 days back.
We are going to do as much science as we can on the way. And on the far side of the moon, we're going to have maybe 45 minutes where we're in a loss of comm with Earth. And all we can do is just train our eyes on that moon surface.
The entire Artemis program has come under significant criticism for how much time it's taking to build and how much money it's costing the taxpayer. There is an estimate that between 2012 and 2025, the Artemis program has cost roughly $93 billion. Despite the criticism, it does benefit from strong congressional support. Many of the programs that are needed for Artemis are spread across the entire United States and provide a lot of jobs for constituents. While the Artemis 2 mission is coming up, Artemis 3, Artemis 4, Artemis 5 are all a bit of open question marks at the moment. There's development that needs to happen for hardware, notably with the landers that will actually take the humans to the surface of the moon. NASA is pulling out all the stops with its contractors to ensure that a landing occurs no later than 2028, but it remains to be seen if that date will actually be possible. NASA stands at something of a crossroads these days. For much of its history, the agency has been the one to oversee the development and fully fund the development of most of its major hardware. But there's been a big push lately to transfer a lot of that work to the private sector and to the commercial companies that are revolutionizing the space industry. The Artemis 2 mission comes just as NASA gets a new administrator.
I grew up as the ultimate NASA fan.
Billionaire and fintech entrepreneur Jared Isaacman, who actually has an extensive resume with SpaceX.
America will return to the moon before our great rival, and we will establish an enduring presence to understand and realize the scientific, economic, and national security value on the lunar surface.
Lawmakers and industry officials have warned that if China were to send humans to the moon before NASA returns, the country could stage something of a lunar land grab that would prevent NASA from exploring the lunar surface as fully as possible. There's a lot to be gained for the Artemis program, from learning how to live off-planet and setting the tone for international cooperation in deep space. The goal right now is to land humans by 2028 and to start establishing elements of a lunar base by 2030. But there's still quite a lot of work to do before any of that will be reality.
When are we going to have a sustained presence on the moon? It's a very hard thing to project. But looking at the rapid pace of technology development, leaps right now, I think it's distinctly possible within the next few years. I'll leave it that vague.
Just the fact that that's possible in this time, and that effort grew out of our commercial crew program in sending cargo and then people to the space station on top of Falcons and then Crew Dragons. It's just a great time, a golden age of human space exploration.
Coming up, the federal government and Ontario are investing $8.8 billion to help reduce real estate development charges. More on that when we come back. Well, the federal government and Ontario are investing $8.8 billion in infrastructure over the next decade as part of an initiative to encourage municipalities to reduce real estate development charges. We sat down earlier with Adrian Rocca, CEO and founder of Fitzrovia, to discuss why this is a positive first step in getting homes built.
We've been advocating with all three levels of government that we have to fix the math equation to get more development kickstarted. You know, depending on what data you look at, new starts are down 50 to 70%, and a lot of that was driven by the math simply did not work. So it's definitely a step in the right direction. We would love to see a full waiver of development charges, but a half waiver is certainly an improvement.
Just remind us what these development charges are, please.
Yeah, so development charges are basically a statutory charge that every developer has to pay. If you look at the total fee load, municipal fees, government fees, levies, it's about 30% of your total development costs.
Wow.
A portion of that would be development charges, and then you have parkland charges and community benefit charges and things like that. So that it was meaningful. And so if you actually look at the 50% waiver, it's about 3% of your total development costs now gets pulled out of your total math equation. That's a benefit. It's about 300 basis points on your development IR. So that is meaningful. Now, rents in Toronto are down, net effective rents are down 21%. So about face rates are about 11 to 12%, and then concessions get us up to about 21%. So it doesn't get us all the way there, but it's certainly an improvement.
Give us that math again. Start off, development charges are typically how much of your cost base, and I think you said this is going to be a 50% cut. Can you walk us through it again, please?
Yeah, so if you look at just the development charge component, it's about 6 to 7%, depending on what cities you're looking at, jurisdictions you're looking at in Ontario.
6 to 7% of the cost of building a unit.
Correct. That's right. And so it would be an implied discount now if 3% gets pulled out of your total development cost budget, and that basically translates into about 300 basis points, 3% of your development IR.
Right. So it doesn't, I mean, to someone like me at first impression, it doesn't sound like it's a huge, I thought the development charge impact on new homes was much bigger than 6 or 7%.
No, it's about 6 or 7% of your total development costs. The number that gets quoted pretty widely is what is your total fee load related to government charges, but those government charges are also parkland, which would be, plus or minus. It used to be about 10% of your total assessed land value, or community benefit charges as well. So collectively, that property tax, et cetera, would be about 30%.
Oh. About
7% of that would be development charges. Now, that will jump around depending on what city you're talking about, but call it 6 or 7%.
That's interesting. So it's really only a portion of these various fees and costs that governments load on that are being reduced here.
That's right. And there was a policy change a couple years ago where development charges were actually deferred. So basically it's stretched over 6 years in equal installments once you complete the building. So there is still a significant benefit, but some of that benefit was offset by the deferral, which was introduced a couple years ago.
And sorry to make you repeat yourself, but I just want to get it straight. What are these other costs that governments load on? Are they all municipal or some provincial, for example?
Yeah, so a lot of it would be municipal led. So they used to have what's called the Section 37 regime. It then got changed into what's called a community benefit charge. So this would go towards schools, libraries, et cetera. So these would be special projects in the jurisdiction that you're developing in. So that'd be one component. So that would be to the benefit of the community. Another component would be a parkland charge. So if you can't basically provide an on-site park, there's a cash in lieu component that needs to get paid to the city so that the city could fund the build out of parks. Those would be two kind of larger sums which are unaffected by this announcement.
You guys build rental housing. That's your game. In Toronto, this decline, you said there was a 20% decline in effective rents. That's got to hurt your economics.
It does. So there has been a significant amount of supply that is being delivered on the market. And so at the tail end of COVID, you basically saw 2 times the long-term average of supply or starts that got kickstarted when interest rates were at an all-time low. So if you look at Toronto right now in the next 12 months, there's about 30,000 rental units that are forecasted to be delivered on the market. That compares to the long-term kind of average of 15 to 17,000 units. However, if you go beyond 12 months, that drops to 17,000 units in year 2. It drops to then 7,500 units in year 3, and it drops to 3,500 units in year 4. There's nothing that will structurally change those numbers, right? We know we're going to have a housing crisis purely with the lack of supply in 18 months from now.
And Eddie was speaking with Adrian Rocca, CEO and founder of Fitzrovia. Still ahead, today's market movers with Bloomberg's Matthew Griffin. The markets are reacting after IRNA reported Iran's president is ready to end the war while reiterating the country's demands. For more on this, we are now joined by Bloomberg equities reporter Matthew Griffin. Matthew, thanks as always for joining us. We've heard this before, that they want these 5 points honored. So what's different this time around?
Well, Roger, it was not immediately clear whether the president's comments, as reported by Iranian state media, really reflect a change in Iran's negotiating position. Again, they have made guarantees in these talks before, but markets right now are just sort of looking for any signs of hope. I mean, you saw rallies in the market earlier today on this Wall Street Journal report of Trump telling aides he was willing to end the war without reopening the Strait of Hormuz. Now you've got additional jump across the broader equity market, also sectors like airlines, on these comments out of Iran. Now, I would say in both of these cases, we have heard language like this before, but it seems like investors are taking the bet that there's a more de-escalatory tone, all things considered today.
And we're just looking at some of the airline stocks. That's where people, after pulling out, looks like they're jumping back on the planes.
Yes, and now Delta actually is in the green on the month, still a little bit in the red if you look further back to when traders positioned ahead of the war. But, they've been seen as a very high quality operator. They own a refinery, so a little more insulated from rising fuel prices and have really recovered a lot of the sell-off. They're rallying today alongside peers like United and Southwest. That being said, sentiment still pretty depressed across the airline space. United down still nearly 15% in March, Southwest nearly 25%. So it seems like investors think not out of the woods yet with those higher fuel prices that are going to raise costs. But again, hoping for some de-escalation that's taking the edge off the sell-off.
And how are energy stocks reacting to this right now?
So energy stocks have sharply, first they gave up a gain, now in the red on the day. You're seeing oil majors such as Exxon and Chevron trading down. Also, other well-known names in the space, ConocoPhillips, Occidental Petroleum. Now, the S&P 500 energy sector still up this month, still, I think it's around 10% last time I looked. And you look at crude oil, the Brent benchmark still up around 60%. So it's kind of a similar story with this geopolitical risk premium is still absolutely baked in. The Strait of Hormuz is still closed, but the oil market and the stocks linked to it, they trade on expectations, and those expectations getting a little more dovish today.
Okay, and then we're going to jump for a second. Snap. Jumping on the Bloomberg report of an activist investor stake? Yes, so this is one that, hard to look away from the war, but this is one that I've been watching today. So now the activists investor Irenic, they've actually sent a letter to Snap, the social media operator, outlining a bunch of changes that they say could boost the stock to $26 a share. Even after a rally on the news, stock still trading less than $5, so they see a lot of upside here. Those changes include
corporate governance changes to the voting structure for the stock, cutting costs by shrinking the workforce, leaning into AI, spinning off or even closing their smart glasses division. So really sweeping changes they're calling for. Snap, this is a stock that has struggled, down almost 50% over the last 12 months. Even after today's rally, they face some headwinds, for example, on Australia's ban of social media for children. And although they have settled the first trial that we're seeing in the U.S. of social media companies, had adverse outcomes for Google parent Alphabet, for Meta, that's been weighing on the stock as well.
Got to wrap it up there, but thanks as always, Matthew. Bloomberg's Matthew Griffin. And that wraps up this edition of Trading Day. Have yourself a great afternoon.